Just joining once again, I want us to work on a question on income statement and statement of financial position. This is to prepare you, even when you don't have a business or you have a business, it's good you know how do you prepare the income statement and the statement of financial position. And by the way, what is this we are calling income statement? Income statement is basically a statement that is credited and debited with expenses. Basically, to evaluate whether the business is profitable or it is making loss. And then a statement of financial position. It is a statement that shows the fair value of the business as at the end of financial year. The fair value. How is a business financed from the capital or from the debt? You can get that information from the statement of financial position. So I want to do the two basic, but later I'll be showing the financial statement for a company. I will also include the statement of changes in equity. Enjoy as we go through this question on accounting. You can see this is a trial balance. I will indicate that this is a trial balance. Just to know, this is prepared when you have completed the double entry. That's why. Nowadays we use system to do all these things. But you see, even with a system, you need to understand this language before you go to the system. Because if you're given something like this, if the system produced like this, and you don't know what is a capital, or how do you interpret this? That is why it is important also, as we're using system, we cannot neglect this old school way of doing it. So I want to use Excel as my software for now. It is still a software, and this is helpful for the academic students, the business people, just to get the general knowledge. Now, this is the trial balance, and the first thing in accounting you have to see whether the trial balance have balanced. And from my illustration here, you can see that the trial business for this business, the trial balance for this business have tallied. This total is equal to this total, and I would have no problem now preparing my financials. So additional information, you can see the value of inventory when the year ended was given there, and the company has a policy of depreciating its building, equipment, and motor vehicle. So here we have the value of land and building, and I see this one supposed to be land, not land, the land and building. So this information here, sorry, the land and building is an information here supposed to read land. So let me solve the question. The first thing you do, you first of all work on the workings. Now for the workings, I would have working number one, and working number one, I would work on depreciation. What we call depreciation. Depreciation is basically the loss of value of capital item. And what is capital item? Capital item are resources that are employed in business for more than one financial year. So since we cannot write off in just 1 year or expense them in 1 year, what we provide for is a depreciation. And one item that I need to depreciate is a building. You can see we have buildings, we have equipment that need to be depreciated, equipment, we have motor vehicle that need to be depreciated, or motor van. So I want to depreciate the building. The value for the building, the amount of, you can see land and building is 3.4. So the value of building here is 2.4 from 3.4. So I'll get 2.4 million. And this one I will depreciate at a rate of, it is being depreciated at a rate of 4%. So I depreciate at a rate of 4%. and I would have 96,000 as the depreciation. It is on straight line basis. Straight line means you depreciate on cost, the cost. Then we have equipment. The value for equipment is that one. I depreciate at a rate of, the rates are given from the illustration. Depreciate at a rate of 25%. So I want to get 25% there, and therefore the value, you can see motor vehicle is on a reducing balance basis. So I'll get the reducing balance basis. I'll have to total minus, this is the accumulated depreciation, 132. So then I multiply that by 40%. It's depreciated at 40% in a reducing balance basis. Therefore, I can have the sum total of this is 202. The next item I can work on, though it is not in additional information, is the loan interest. Loan interest, I need to confirm whether the loan interest given there, we can see there is amount of loan is 1.5, this one, 9%, 1.5. Now, what does this mean? 9% means that this loan interest is fixed. So if I want to depreciate it, I want to determine the value of interest, I'll take the principal amount multiplied by the rate of interest. This percentage appearing before the word loan, it means that that amount is fixed. It has to be paid. But now, you see, they have only paid 120,000. So there is an amount which has accrued, which has not been paid. And that is 15,000, so that you can get we can get the difference between 135 and 120. What has been paid? What has actually been paid? 120,000. So someone would ask, why compute 135? So we're using a accrual concept in accounting, whereby you're supposed to provide for expenses, whether the expenses have been paid or not. So that is why I had to compute the whole amount. 135 is what we charge to the income statement. So let me now start answering that. This is Abba Enterprise income statement for the year ended, for the year ended 31st March 2018. So I can have my currency here on both sides, this side and all this side. That will be okay. So I'll begin with the sales value, and the beauty part of this is that we just using Excel, I'll just be copying and pasting. So from the sales figure, we deduct the cost of selling these goods. We deduct the cost of sales, and the cost of sales comprises of what was there in the stock. That is what we call the opening inventory at the beginning of the year. And the value for opening inventory, from the trial balance, we can get the value, which is given as the opening inventory is 242,000. Then I'll add the purchases. Yeah, the value for purchases is given. So the value for purchases, just need to click this one. To copy this, the value for purchases, and then when I go to the value of purchases, I will just copy and paste there. Then there are some goods returned, purchases returned. So it should reduce the value of purchases. You should read the question first before you solve. I know I might be a bit fast, but I want you to get it. Purchases returned. what was returned from what could have been returned, sorry, from control page up. Okay. So the return, what what was returned? It is purchases return. We have it. What was returned from the purchases? So we can have it there. Then we less what remained in the stock. That is closing stock, or closing inventory. That should be deducted. Why should it be deducted? It was not sold, so it is not part of the cost of goods sold. Yeah, so it should be deducted from purchases. I think this one you can have the accounting one, so that it work better for us. Yeah, aren't we? So I need to get the sum of all this, and sum of all this is going to give me 1630, 100. Then I need the gross profit for that. The gross profit will be now the sum total of these minus that. Then we have other incomes. Other incomes, one of the other income is the discount received. Remember, I'm showing you also the presentation for the income statement. Discounts received is an income, and it should be credited in the income statement. This is the amount of discounts received. Then we can have the expenses, and our expenses now, we can start from the working. There we had the loss of value for capital item, depreciation figure. This depreciation figure is given there. We have it as 2,000 in the total there. We have loan interest. The loan interest is also it is also an expense figure. And I've said we charge the whole amount. The loan interest is coming to 135,000. Just copy and paste. Once I'm done with workings, I'll just need to come here and identify all the expenses that I have. From top of the trial balance, expenses are usually on the debit side of the trial balance. So from here, I've worked on inventory, purchases, electricity. Electricity I've not touched. I can copy all these, then I remove what I don't need. This is the beauty part of using. I can even copy all these up to where we have the recoverable date. I just remove what I don't need because it is good. They'll help you to work on something. I can migrate these figures to just copy and paste over here. Then I remove what is not for me. These two is not for expenses. I remove the drawings. Drawings is an appropriation of capital. Just remove it. Trade receivable. This is a current asset. That will make my work easier. And bank balance is also not there. Then I can go back and see which one I have not copied. And I can see truly resist general expenses. I have not copied this one. So I can copy that one and paste it here and to make my work easier. I just need to paste it there. Then I can have the sum of all this. So see, this will be easier. So you see, this thing, my people, it's just as easy as you can see. I think I've done something wrong, but it's okay. The total expenses. So I need the net profit. What would be the net profit? Before I get the net profit, I need to get the total income here. I can sum up all these up to there. And there we are. This is the total income. The expenses are there. There's one. The incomes, I can bold this for it to be clear. So net profit is a function of income minus expenses. There you are. So our profit is 943, 330. I can double underline that one. I go to other statement of financial position, and statement of hazard value was December, that first March, sorry, 2018. That was March 2018. So there you are. We start with non-current assets. And for non-current assets, we have land and building. Why non-current assets? Non-current assets are resources in business for more than one financial year. Yeah, so they're called non-current, not recurring expenditure. So we have the value for land and building here. Remember, the balance sheet is supposed to show assets at their fair value. So their fair value means the market value, or the value at which the asset can fetch in the market. So we need to get a fair value when we have depreciated it, or when you have the revalued amount. That could be the fair value you're talking about. For now, we have just depreciated. We will deduct the depreciation. Then we have the motor vehicle. So, all equipment, whichever comes first is okay. So, the beauty part of using Excel, I don't need a calculator. I'll just work on it while it's here. It makes my work easier. And I deduct the accumulated depreciation, provided you are right on your computation. That would be okay. So then there is equipment, and this also does not together the cost, which is here, and the cost is minus accumulated depreciation minus the current year depreciation, which was the current year depreciation 55,000. So you can get the total value of the non-current assets. Then you go to current assets. Current assets are assets available in business for let's say for less than 1 year. We start with inventory. The closing inventory was 225,000. Then you have trade receivables. So trade receivables, we have it there. So the trade receivables, you can see, just need to to copy that. We have bank balance, and bank balance is given there, so we just need to work on it. The bank balance, the value for bank balance is given in the trial balance. That is the value. Then sum total of all this and get it there. Then I can have the total assets as total assets will be given there. The sum of these total assets is given there, and therefore we can have this total assets. Then we can have the current assets, current liabilities. Remember, in accounting equation, we usually say that capital is equals to assets minus liabilities. That is total asset minus liability, which can be minus liabilities. That is current liabilities or total liabilities. But the best way to present it, we get the net asset by deducting the current liabilities. So remember we had accrued interest. The other payable current liability we have is the payables. Payables are the creditors of the business. So I would copy and paste. It's easier that way. Accrued interest was that one. Payables, pull it here. Payable is here. Remember, liabilities are usually on the credit side. So the two of them, then I can have the sum total of these two, and from there I get the net assets. Net assets after deducting the current liabilities. So that value minus this give us the net asset, and therefore for my accounting work I have the net assets there. So I can go to finance to buy, and this one I'll start with capital. Being a sole trader, you just call it capital. In a company, we refer to it as equity. Now this is a sole trader business, so that is the amount of capital. Then we have the net profit for the current year. But before then, there was a drawings, there was appropriation of capital. Some part of the capital was taken by the owner. That is why we have the drawings figure of 320,000. Then we can have our net profit here. Our net profit is just all above there. This one is easier, we just get it here. That will be okay. Then we have non-current liabilities. Non-current liabilities. And this one we have 9% loan stock. 9% loan is a non-current liabilities that we have, and that amounts to 1.5 billion. So it can have the total capital and liabilities. Total capital and liabilities. Yeah, so getting the sum total there, would have it as that way, and you can see that my accounting work has purely balanced, because the trial balance was okay. I will not have any trouble in balancing the accounts there. So the accounts are balanced there. I hope you enjoy